Hi, everybody. Thank you so much for joining today. My name is Kat. I'm an annuity sales director here with IAMS. I've been here for nearly 2 years now, but I'm super excited about the webinar we have today. Thank you so much all for registering. We've got a really nice show up. About 87 registrants that we have here today. And so if you were not able to attend today, don't worry. I've had a few people call in and say that they're going to have to miss, but definitely wanted the recording. Don't worry. We record all of our webinars and keep it accessible on our IAMS YouTube library. And of course, as always, if you just want to give us a call, have us shoot you the link, we'll do that too. So without further ado, I did want to introduce who we have here today. We have Paul Garofoli, RVP of the Standard. We're really excited to have him here today because they are one of the only carriers that offers a Medicaid compliant annuity. That's a really big deal, especially going into the season that we're going into. Um, how many of you on this call so far, and I know I might not be able to see, but I just want you to think about it. If you are currently in the Medicare space and don't have this option in your back pocket, I think you absolutely need to, because Medicaid compliant annuities seriously come in handy for couples, for planning on spend downs, and pretty much for everything. This was my background before I came to IAMS, and so I'm super passionate about this. Paul also has a great setup and a deep dive into long-term care alternatives using annuities, because as we know, clients we have might not always be able to medically qualify. So I'm super passionate and excited for what we are going to be talking about today. And so we'll be learning more about the Standard. It's an A-rated carrier, been around since 1906. Paul himself has over 40 years of experience. And so without further ado, I'll go ahead and do a little bit of housekeeping. As we always do, just a quick refresher to our IAMS agents. These are value propositions, the ones that we've stood by and for the last nearly 40 years. And for our newcomers, this will be new, fresh material for you. So I'll go ahead and just get started. So we have our new producer builders available to our new IAMS agents. In the first 180 days, you have the $100,000 level all the way up to the $1 million level. And that's 180 days of annuity production. Now you'll have to call in to ask us about what the life equivalent is to this production. But this is great because we are giving you a boost essentially into your marketing reimbursement, and nice incentives just for getting appointed with IAMS. And so the Standard, for example, that could be the first carrier that you have on your docket if you're new to IAMS and just getting started. In the $100,000 level of annuity premium, you can get like an iPad, $750 cash. And then in the 250, 500,000, $750,000 level, the mid-tier level, starts getting interesting. You have more cash potential, and then a lot of neat things like if you are into digital marketing, you can get digital leads qualified. You can get gift cards, cash, pretty much anything. And then at the $1 million level, you unlock 8 to 10 preset annuity appointments. Now these are preset. You could also get access into some seminars. So I don't want you to be limited by what you see onto the screen. A lot of newcomers that I have that join IAMS typically already have marketing. So the best part about IAMS is that we are fully collaborative. We like to collaborate with you. We like to customize things tailored to what's currently working for you. So take a look at this screen, but do not be hindered by what you see on this screen. Definitely just let us know what's already working for you and we'll work with you. We do also, again, have more business builders. We have our marketing reimbursement. So after 180 days, you actually graduate into our marketing dollars program, where for every $100,000 of annuity premium you're doing, you get $100 back into your marketing account, which is super nice because you know how expensive marketing can be. And so I can only speak onto the annuity side since I'm only in annuities. But on the life insurance side, for every $200 of $100,000 of premium you're doing for single premium life, you get $200 back. For every $10,000 of life target premium, you also get $200 back. So if you're doing a good blend of both life and annuities, it makes sense to maybe partner with us both on the life and the annuity side, just because it's money that's all going back into your pocket for marketing just by doing business with IAMS. And then you do have your referred producer program, which is really nice because um, referrals are the lifeline of your business, and it is for us too. And so every time you refer an agent to us, we give you an extra $50 cash bonus. Plus, on life target premium, you get 15 basis points override, single premium life 0.075%, on fixed index annuities 20 basis points, and on MIGAs 10 basis points. And so we do that on a quarterly basis. And so the biggest thing is people think with our referral bonus that you're getting an override off of the agent that you're referring's commission. No, it does not come from their commission. It comes from a check cut from IAMS. So Stephen Charles, the CEO, the president, and then Charles, the owner, the both of them, that's their favorite checks to sign because they appreciate the fact that you are doing business with IAMS, but it's the greatest compliment to them that you're also referring us business to work with your fellow agents. So really, really good things to think of there. We also have great and excellent back office support. So the biggest thing about IAMS is that we have a 2-ring guarantee. We do not have any voicemail. So as crazy as it drives us sometimes with the phones ringing off the hook, it's amazing because all of your questions are getting answered. All of your illustrations are being met in a timely fashion. We make sure we meet these very quickly and very promptly, especially if you tell us how urgent it is. So if you call in and say, hey, Kat, I want to do a $250,000 annuity illustration on something that Paul might show us today, I can definitely get that to you within the day. And with that, we have a great annuity illustration team. We have great new business here. I think we have the best. Being out in the field, I know how crazy back office can be. It would make me want to rip my hair out sometimes, but we truly do have the best. And again, that's, I think, because they collaborate with the agents. It's not just about collaborating with the carriers, but we also collaborate with you to make sure that we're meeting deadlines and things in a timely fashion. So really good back office that we have. Our IAMS website, that's accessible to you 24/7. So not only do you have back office support, but you're also able to run your own quotes if you'd like to. You're also having full access to Annuity Rate Watch. Most people have to pay for this. I know a lot of people use Annuity Genius, but we've got Retirement Analyzer that we give for free to our contracted agents, and we have a new annuity rate watch. So those two tools combined are very, very powerful. You could also do policy reviews with Retirement Analyzer. And once again, we do give that to agents for free if you are contracted with IAMS. And that is all available on the IAMS portal. Um, and then again, on the annuity side, it could only really speak to that. But on the life side, I know that they have some great underwriting material there as well and a good long-term care grid. So definitely just let us know how we can walk you through our website. And then all in this portal too, amongst all of the resources and tools, you're also able to access all of the e-applications such as Luma, Firelight, iPipeline. Luma Firelight, that's a newer addition to IAMS, but Luma Firelight has this really good feature called Life Cycle. Life Cycle is great because it'll tell you what's been enforced, what's going to be coming out of surrender, what the current rates are. It's really good because sometimes the best business and the easiest business you could do is the business that's in your backyard. So if we're looking at replacement business that's in the best interest of the client, Luma Life Cycle is a great starting point. We do also have our creative services. They're in-house creative services. We have agency solutions, digital solutions, different turnkey options. You're able to customize and collaborate with our creative department team here. And it's nice because we all come into the office every single day. I'm recording this webinar right here in the office. We all come in, and we've got two locations. We've got one in Topeka and one here in Omaha. So the creative team is split between the two locations. So there's more than enough people. We've hired enough people to bring onto our creative services to really work with you to get your digital branding, pretty much anything you need for marketing going. And so here is something we offer too, a complimentary marketing analysis. This is for agents that they might be a little bit all over the place when it comes to their marketing, just need a track to run on, or it's for the person that already knows what they want, but just wants to see it on paper. This is a 20-page type of booklet that we put together for our agents, and it's a two-piece process because we want to make sure that we're getting your marketing correct. And all of the fine details, they all matter. The little things truly do go a long way, especially in this industry. And so the marketing analysis, that's complimentary. It's a two-piece process. The first piece is where we're asking you a series of questions to figure out exactly what it is you're looking for, or we just listen to you and you tell us what you want. And then the second piece is Julie over in Creative. She puts together about 20 pages of a track to run on. So if you haven't done this, I would say definitely do it, especially in preparation for 2026. It's quarter 4, so I know we're trying to get a lot of business in, but if you're planning ahead of time, you could really set yourself up for 2026 quite nicely. And then our IAMS Wealth Management team, this is great. So if you are an aspiring advisor, they have a great starter program. And then if you've already been in the industry, they have very comprehensive knowledge of just the security side of the business. So in this building that I'm in, we are all insurance, but they are right down the street from us. They actually moved into a nice new building. But these are some of the most humble advisors that I have ever met, which is a huge deal. And in return, they help you increase revenue, improve client retention, and strengthen your relationships. And again, if you are aspiring, they do have a great starter program. So if you're curious about that, just give me a call and we could talk about it, and I'll get you the information to connect with them. And so next up, I'll be going over some different incentive trips that we have. This first one is Athene, and we are about to come to an end on qualification. This one will be over in the Dominican Republic, and we're really happy to partner with Athene on that. The next one we have is with SILAC. This is nice. It's one of the smaller qualifications that we have, and the qualification period doesn't end till April of next year. And it's $2 million in paid SILAC FIA business. So that's super nice in Utah. You'll get to see the headquarters, but also stay at this really fancy hotel. So they'll wine and dine you, all the good stuff just for doing business with them. And then we do have our Life and Annuity Academy that'll be hosted by Athene and North American. This is our last one of the year, and it's one of my only chances to meet agents in person. So all of the work I do is over the phone, all virtual. I usually don't even show my face in these, but Paul was so nice. I saw he was going to go on here, so I thought, you know what? I'm having a good hair day, so let's all just get on together. Um, And then, but yeah, this is a great way for us to meet people in person. And one of the only times we also have our $1 million keynote speakers. You get to network with some top agents in the industry, and then you get to meet the carriers. So that's the biggest thing. They're the ones hosting these events. And so we're very appreciative of that, to have the type of relationships that we have with the carriers, a very close one. So Athene, North American. I'm really grateful to have Paul, our RVP of the standard, on here. So really take full advantage of all of the training that we do, both in person, virtual, and in your back office on the IAMS portal. And so that would come to an end of everything I have. I'll go ahead and pass this over to Paul. These are just our social media links that we have, our website, and then of course our phone number, 800-255-5055. But other than that, again, I'm going to pass the phone over to Paul and let him have the floor. Thank you so much.
Fantastic, Kat. I'm just waiting for the share button to pop up. I don't see it yet. So if you give me sharing privileges, I'll be ready to go.
Absolutely. Coming your way. Start presenting.
All right. So what I'll do is I'll just kind of start and then we'll kind of catch up here. So
Sure.
I'm talking about the standard, and we're going to talk about long-term care funding solutions with an emphasis on a Medicaid-compliant annuity. We call it a restricted immediate annuity. But ultimately, what we want you to think about are funding opportunities that just go beyond the restricted annuity and really some other kinds of things. So we open up with some basic statistics. We recognize that 70% of people age 65 or older will have some type of accelerated or activity of daily living limitation. That's bathing, continence, dressing, eating, toileting, transferring, to the extent that they will be disabled to some extent, and that they may need some assistance. And that may not mean they're going into the nursing home, but the prevalence and the frequency of people at a certain age having that circumstance is significant. We also recognize that 5% of the senior population today lives in a nursing home. So that's a reality as well. We also look at our own family situations. We know of, if I did this in person, if we did raise your hand or click a button and say, in your immediate family or friends, did you have a disabling situation where somebody's in the nursing home? And the answer would be invariably yes. So if you move on now, we've got the presentation, Kat, so I'm going to give verbal clues, a lot of punches here. So we're going to talk about these senior planning solutions. So if you could advance the slide, if that's possible.
How's this, Paul?
That's perfect. So kind of going back here, but I just want to point out that what annuities can do, and this is kind of the standard menu of things that we can do. We can issue annuities up to age 93 for 5-year FIAs and 5-year MIGAs. We can write an annuity on somebody that's already in a nursing home. We can use the power of attorney at the standard to write an annuity for someone. Our maturity age, that is the ultimate age at which the policy endows, is age 115. Your clients will not outlive their annuity with the standard. Really significant in that. We do have, and this addresses the immediate topic, 100% nursing home confinement, and that's available at all ages. So yes, somebody age 93 can get a nursing home confinement waiver. We also accept third-party ownership of our products, trusts, corporations, pension plans, all those kinds of things, joint owners, joint annuitants, a flexible death benefit. A key element why I highlighted it, our products can be annuitized at any time, and that will lend itself to the whole restricted immediate annuity discussion. They can be fully liquid. We have a MIGA that can be liquid without a surrender penalty, full return of premium. All our regular products, FIA and MIGA alike, can be converted to a Medicaid-compliant payout without surrender penalties. And then we also offer RMD solutions and a very competitive death benefit. As we move on to the next slide, you are doing great, and I appreciate that, kind of lending itself to the needs of people that are in that situation. And maybe you're doing it and it's just taking a while to pop up on my screen. So I'm just going to riff here a little bit while that pops up. And it really goes to the need for long-term care. We talked about that early, the statistics, 70% needing that. And ultimately, to the key topic, 43% of people that are in nursing homes are getting subsidized by Medicaid. Now, as we talk about how standard annuities can help, we are accumulation and death benefit focused. We have no income rider. We have no income doubler. We don't have accelerated benefits. The beauty is Kat and her colleagues at IAMS, they have some products with those features. But the things that we're going to focus on are the nursing home confinement rider, the anytime annuitization, guaranteed index terms, guaranteed fixed rates, and Medicaid compliant convertibility. Now, in the nursing home rider, as we kind of move on, that's available at any age. As I shared with you earlier, it has a 1 year wait, 30 consecutive days of confinement that can occur during that 1 year wait, and full value of the policy plus partial interest crediting is available. That's kind of unique to a lot in the industry. A lot of people, a lot of carriers go back to the initial policy anniversary for policy values for withdrawal purposes. We don't. We give partial index credit and partial interest credit. So that's that. Now, the anytime annuitization, that's built into our product set as well. You can do it and exercise it at any time, day 1, day 10, day 100. You can choose a lifetime payment option, or as for a minimum of 5 years, a minimum of 5 years. It's a great liquidity option. It can pay, we pay third parties. So someone can own an annuity with us. And really the whole idea is that you're seeking ways to help fund the cost of long-term care. So an annuity that's set aside for growth, you could actually annuitize it and make it a payment stream to the nursing home. That's the connection there. And then we also have, we'll talk about that at length, the restricted payout options are available as well. As we move on to the next slide, Kat.
Are we, am I behind or are we on the multi-choice annuity 5?
Yeah, we're behind, Mike. I'm lagging. So I just got done with the anytime annuitization. It may pop up in a second. But what will pop up, and maybe everybody else sees it and I don't. So that maybe that's the way that we should proceed. So are people seeing that? Because what I'll do is I'll just go off what I have and catch up. All right, so we're on the multi-choice annuity. All right, so we got it. So we'll just kind of sync it up here. So on the multi-choice annuity, this is our featured annuity. Again, we're talking about accumulation for purposes of funding anything, including long-term care. And in this case, our current best rate is 5.10%. That's all rate. But remember, that can be annuitized at any time. The return of premium feature for those that are annuity reluctant at a rate of 4.90, you'll see that on the bottom. You can get a full return of premium without penalty, offering liquidity in the event of a nursing home need. So we go on to the next slide, the Enhanced Choice Index Plus. I'm just demonstrating that, again, a way to accumulate funds for long-term care. What's one of the great ways to do that? A fixed index annuity with guaranteed terms. We offer that so you have that opportunity for potential growth and retaining gains as well. A current cap of 9.5, a trigger rate of 7, participation rate of 47%. You can even get a guaranteed cap for the length of the contract, 7.5%, or a trigger rate where the index has to do nothing, or a fraction of a percent upward gets 6%. So just want to make you aware that, again, the concept is we accumulate money for any need, particularly long-term care. As we move on to the next slide, the death benefit slide. Now, this may be a little ghoulish, but again, we're looking at ways to help people find the money to help fund for long-term care. And here's a way to do it. We have one of the best death benefit riders in the business. It can grow guaranteed within the contract, available up to age 80. So people that are even seniors that are really considering how they're going to finance long-term care, how they're going to not make it a burden on their loved ones, that guaranteed growth rate is 6% compounded, 6% compounded. That means money can double using the rule of 72 in 12 years. But not only that, the index credit can double. So if the index does 4, the death benefit growth will be 8. If it does 5, the death benefit growth will be 10. So you're growing potentially a huge sum of money that when God calls the client home, they'll be there for the beneficiaries to help finance end of life expenses and even long-term care. So it's just a way of building assets, building funding to help fund for long-term care. Now, as we move on, we're going to talk now for those that came for the restricted or Medicaid compliant annuity. That should be our next slide, the restricted single premium immediate annuity. The standard issues those, and one of the advantages that you have with the standard is that we're an A-rated company. We've been doing this type of business for years to the tunes of hundreds of millions of dollars. And so we're very expert at that. So the term we use is restricted single premium immediate annuity, or so-called Medicaid compliant annuity. There is no such thing as a Medicaid approved annuity. It's compliant in the way that it pays out the benefit. They are designed to convert a spend down amount into an income stream. They're typically paid over life expectancy, but they're guaranteed. So it's not a life only. It's a life expectancy payout. So if somebody is age 70, for example, their life expectancy might be 18 years. So the immediate annuity, in order to be compliant, will pay out guaranteed over 18 years. So it's not a use it or lose it situation. Somebody will get paid for that. Now, doing that, and by converting a countable asset into a restricted stream of income, may help some people qualify for Medicaid. And so we offer those restricted single premium immediate annuities initially. A lot of times we use those in what's called crisis planning. Something's happened to grandma, something's happened to mom. She's in the nursing home, and now we're converting assets and figuring out a way to help her qualify for assistance or to help her spouse maintain a standard of living. And so we do that. That's crisis planning. But what I wanted to convey and what Kat wanted to convey is that we can do this in advance by way of standard MIGAs, multi-year guaranteed annuities, and fixed index annuities, because that restricted payout is built in. That's the key here. Now we're going to expand on that in terms of Medicaid and kind of figure that out as we go to the next slide. Is Medicaid the first?
Oh, I'm so sorry,
Say again?
Paul. I'm so sorry, Paul. We just had a couple of questions here. I just wanted to pause real quick so that
Okay.
some of our listeners could get these in before we forget. So Dave, go ahead and type in your question in the chat box, just because it auto mutes everybody except for Paul and me. And then same thing for you, Juanita. I saw you raising your hand. Go ahead and type those in the chat box. Now, Alan is someone that I work with. He's asking, do any of these Medicaid annuities work for veteran benefit planning like the old days?
Yes, the answer is yes. So those go hand in hand. So, there's been some challenges in terms of the aid and attendance benefit. So I remember those great days of that helping plan. But yeah, so the similar planning for this specialty benefit. Now this is, another niche where this can be used, but to qualify for that special veterans benefit, it's called the aid and attendance benefit. You have to have similar restricted language. So you have that. So the answer is yes, it can help. For the rest of the audience, if you're not involved in that type of planning, I would say you're fine. Let's not focus on that for you, but focus on kind of the traditional Medicaid planning. But for our caller, yes, this would work in those scenarios. Kat, you said you might have another question.
I got one more for you, and it's from Juanita. How does this annuity work if the owner never enters the nursing home?
Okay, so, well, that's the beauty. So remember the two things that we do. One is that we can do that immediate annuity in that way. Now, typically what happens is you would not buy a Medicaid-compliant immediate annuity. That's where you buy it and you get payments the next month. You would not typically buy that unless you were contemplating or in a nursing home situation. So that's number one. Now, number two, remember, as I said, the other annuities, and Juanita, sometimes people takes a second to understand that. It's built into the product, and that's the genius of it, that if you never use it, you got the benefit of the product in and of itself. If you bought our multi-year guaranteed annuity that paid 5.10%, you get that. And if you never have to go in the nursing home, you just had your money grow without the need to trigger that restricted immediate annuity payout. So you're good there. If you bought the fixed index annuity and never went into the nursing home, then you had growth, you retain your gains, all the values of indexing, plus tax deferral. Maybe you add a death benefit for beneficiaries. So again, what we're able to offer at the standard is, on the Medicaid situation, a way to help people convert countable assets to a restricted income that ideally is below the income limits of the various state programs that will allow them to qualify for Medicaid assistance, and or pay a spouse to live a reasonable standard of living. So we consider those things. Now, I'm on Medicaid, the first or last resort. And again, I want to address the realities of the situation. Many Americans will end up on Medicaid for these reasons. 43% of people living in nursing homes are financed, are paid, their stay is paid by Medicaid. So they don't have the financial means to pay for the high expense of nursing homes. They can't afford or qualify for long-term care insurance. And remember, I use my words carefully. We talk about long-term care funding. We are not offering long-term care insurance. IAMS has those outlets there. They also have other products with accelerated benefits, particularly on the single premium life or the periodic premium life. Great carriers that do that. I'm just offering you another way to do that. A lot of people that might be able to afford long-term care insurance, they view it as a use it or lose it plan. If I don't go in the nursing home, I spent all that money for no particular reason. And then wishful thinking. So we know that. So now let's go into the next slide, what Medicaid actually is. And sometimes people confuse Medicare, Medicaid. This is Medicaid. They are two separate programs. So understand that. And also understand the last bullet point here is that Medicare typically does not pay for long-term care. They will pay for rehabilitation. They'll pay for some carryover expenses that are medically related. You may be in a nursing home, but you're getting medical care there. They'll pay for that for a period of time, but the actual care for your this disability, they will not pay. They won't pay for the food. They're not going to pay for the room. They will pay for the medical care. That's why that Medicaid component is really important. It's a jointly funded program between the federal and the state. It's based on federal law, but it's interpreted by various states. There is a lot of commonality state by state, but the regulations and the income limits are different. The asset limits are different, similar, but different state by state. And again, the takeaway here on this slide is that Medicare and Medicaid are two separate programs. Now we go to the next slide about Medicaid eligibility, and then we'll offer the solution that can fit these circumstances. With Medicaid eligibility, basically it's a program for people that are technically impoverished. There's an income limit. There's an asset limit. Amounts differ whether you're an individual or a couple. States are either spend down or income limit. So in other words, you may have a basket of assets. Some states say you have to spend it down, basically finance your own care, do it yourself. That's not bad. That's okay. Spend it down. You acquired assets, you spend it down. And once you get down below that asset limit, then you might qualify for Medicaid. Sometimes there's an income limit. You can only make so much a month, kind of a benchmark limit, 2,000 to 2,400 a month. That varies by state. Medicaid planning can help meet either criteria. The product can help meet either criteria. And also keep in mind, most Medicaid planning is for couples. Now, the asset repositioning, the spend down, the purchase of a restricted immediate annuity, a Medicaid compliant annuity, these are all legitimate planning elements to help people finance their long-term care needs. So it's all perfectly legitimate. And the takeaway is a lot of Medicaid planning is for couples so that one couple can get the care that they need, but the couple that is not sick or hurt can still maintain a standard of living, maintain their house, get an income, help pay the bills, those kinds of things. We move on to the next slide. And as this is just kind of validation of the practice. So you just kind of go, oh, it's a well-established practice. Many attorneys specialize in elder care planning, which in part includes Medicaid planning as well. And so we have different congressional acts, the Omnibus Budget Reconciliation Act of 1993, the Deficit Reduction Act of 2005, all incorporate the methodology and the procedures and processes to get qualified. As we move on to the next slide, again, some of the technical stuff, I just want you to be confident that, hey, there is a process here to help people qualify. Now, some of the takeaways here, these additional requirements, what's required? Well, you must name the state Medicaid program as a primary beneficiary up to the amount that Medicaid has spent for care. So this is a real thing that you need to understand. The state has the potential, if they've been financing long-term care, to actually get reimbursed for that. So again, that's why it kind of goes to the ethical nature of it. We're helping people qualify. If their annuity outlives their life, the annuity will pay the state back for the care that they received. But in the meantime, they got the care that was needed. There are disclosures. They have to talk about the rate of interest in the annuity, the income annuity, and this is the key. Not every annuity qualifies. You have to have special language. It must be irrevocable and non-assignable. Actuarial sound, must provide equal payments with no deferrals, no balloon payments. So again, there's a way to convert assets using the Medicaid-compliant annuity, using these steps, and our annuity does that. Now, going to the next slide, let's get to the chase. What is a Medicaid-compliant annuity? It's essentially designed to convert assets that are countable, that might delay support from the Medicaid program for the client's care. It's designed to convert what they would have had to spend down and wait for help into an income stream. When that spend down amount is eliminated, the nursing home becomes eligible for Medicaid. So you take countable assets, convert it into a restricted income paid out over a life expectancy, and you qualify. So essentially, a Medicaid compliant annuity is a period certain single premium immediate annuity with restrictions. And we offer those restrictions in our restricted immediate annuity. That makes the annuity irrevocable, non-assignable, non-surrenderable, non-commutable. You can't go back. You can't go to J.G. Wentworth, Cat, and go, I want my money. It's my money. I want it now. No, it's going to be paid periodically, monthly, over time in a restricted way. We go on to the next slide. This is a case study. And again, I said a lot of Medicaid planning is for couples. So here we have a couple, Jennifer and Greg. They have total assets of $426,000. Jennifer, unfortunately, had a qualifying event. She has to go in the nursing home. Maybe she broke her hip. Maybe she's become cognitively disabled. That's costing $6,000 a month. depending upon the state, long-term care is $6,000 to $10,000 a month. So her nursing home care, obviously, if it just spent it down, would deplete their assets. And that would affect Greg as well. So how does the Medicaid compliant annuity work? Now we're going to get into this, Kat. I don't know about you. Math is hard, but we're going to try to keep it simple. So remember, these are joint assets. So first of all, that $426,000, each has a share, 50-50, $213,000, based on a particular state. And we're just kind of using a generic state. Greg keeps $100,000 to stay below the maximum assets for a spouse that's healthy. And it varies state by state, but it's about $110,000. They keep $100,000. Greg's balance, now he has to combine that with Jennifer. So now he's already, with this planning, preserved some assets, but still there's $326,000 of countable assets. So are they going to have to spend that down? Well, the next slide tells us what will happen. So the next slide has a setup where, even though it's community money, the owner would be the healthy spouse. That's Greg. The annuitant is the healthy spouse. The payee is the healthy spouse. The beneficiary of that payment stream to him to maintain a standard of living will be the state. So if the wife passes, they'll go that. We have certain forms. And then the big takeaway, Kat, you should always be working. Your client should be working with the qualified elder care attorney, somebody that specializes in elder care legal matters in Medicaid filing. You do not want to do it yourself. The purpose here of this presentation, why we put it together, is to make you aware that you have this outlet that's available. We do not want you to become Medicaid planners, but we recognize that based on the markets you are, and we know that annual enrollment period's coming up. Everybody gets excited about that. You run into these situations every day. So what happens is, in terms of what occurs, is we look for situations where the husband and wife, one can expect to enter a long-term care situation. You always instruct the clients to work with an elder care attorney. You obtain the proper annuity illustration on that 2-ring call that you get into IAMS. They can help you with that. What makes an annuity payout Medicaid compliant? It's a restricted endorsement. We have that built in. Non-transferable, non-forfeitable, non-assignable, non-communicable, irrevocable. No change of payee, no change of payment option, no cash value. So that asset, in the case of Greg and his wife, $326,000, that was converted to a stream of payments to him based on his life expectancy. If I recall, I think he was 68. So that could be 20 years of life expectancy. It's going to be a guaranteed payout that will keep him below the income limit, help her qualify for care, help him maintain a standard of living. Why did the states allow this? Why is this all built in to this regulation? Because the state doesn't want to take care of two people, because they recognize if Greg is impoverished, then he goes on different state programs. So he maintains a reasonable standard of living. She gets help. If she predeceases the period certain of the annuity, the state gets reimbursed. It all works out. What are additional considerations moving into the slide here? Remember, all of the standard products feature this anytime annuitization. That means our MIGAs and FIAs alike can be annuitized at any time. Annuitization can be either regular or restricted. The feature is a great pre-planning option. So I'm trying to win the ties, ladies and gentlemen. If you have, say, a lot of people go, I don't know what's going to happen here. Things are declining maybe a little bit, or God forbid, or whatever it is. So rather than wait, you know that this is built into our products. So if that happens, then they can do that. always instruct the clients. Am I consistent with that, Kat? Always instruct the clients to work with an elder care attorney. Now, we don't
Absolutely.
operate in the shadows. If we go to the next slide, we actually have a toolkit. Remember, the standard website is PIN and password free. Standard.com/annuities. Go to marketing toolkits, and you can get all kinds of information on that, including that case study that I showed. Going to the next slide, with consumer approved materials to help educate them on what planning possibilities exist. That's available to you and to them with compliance approved materials for you. One more slide as we move on. Some practice pointers. We're all about practice improvement. So it's important, it's a reality. We just recognize. So again, to sum up, 70% of people age 70 or older, or I'm sorry, age 65 or older, will have some type of health event where they are either temporarily or permanently activity of daily living restricted. That's bathing, continence, dressing, eating, toileting, transferring, that they may not be able to do one or more of those things for a period of time. If they can't do that for an extended period of time, then typically they're going to go into the nursing home. Also, introduce yourself to the next generation. They're listed as beneficiaries. Hey, I've been working. I talked to your daughter, Mrs. McGillicuddy. I want to make sure she's aware of some of the pre-planning we're doing. I'm sure it's a concern for her. Oh, by the way, Kat, I don't know where you rank in your family, but guess who the primary caregivers are for parents that need long-term care or maybe even extended home health care assistance?
It's
Not the
usually the
son.
kids.
It's the kids. Guess what? I don't know if you have brothers. It's not the son. It's who? The daughter. So that's real key to understand. Network with your local elder care attorney. Look it up. Google it. In your town, who are the elder care attorneys? Hey, I just want to network with you. Just so you know, if you engage in this type of planning as an elder care attorney, I have an outlet for restricted immediate annuities, and I'd be happy to do the illustration, procure illustrations for you. I have some clients that may need your services. You may have some clients that could use some insurance advice, some retirement planning advice. Let's work together. You can also network with elder care facilities, independent living, assisted living. Hey, by the way, just so you know, I have the ability to help here. So if you have somebody in that situation, because these facilities, they are looking to make sure that they provide the care that people need. That's first and foremost. But they also want to make sure that they have the proper funding, whether it's self-funded by the client using assets that grow that we demonstrated, whether it's by true long-term care insurance, great, but only 5 to 7% of the elderly population have that. Whether it's by accelerated benefits, I love those so much. We don't offer those, but IAMS does. Single premium life, periodic premium life with accelerated benefits that are triggered by the inability to do 2 or more typically activities of daily living. With life insurance products, you get immediate leveraging. With the annuities that we described, you get leveraging over time. Also, keep in mind, there are hybrid annuities that are available that actually provide qualified long-term care benefits with some leveraging. I think of the Equitrust product. I think of the One America product. I think Global Atlantic has one. Nationwide has one, where you're buying an annuity, but you're really buying long-term care benefits or long-term care funding within that annuity. The give up is, well, the annuity may be just okay, but you get some leveraging in that regard. With us, you have access to capital, you have access to funds there for any reason, not just a long-term care admission. So those are some things to consider. Kat, we come to the last slide, and that opens it up to questions. Sorry for the some of the technical miscues, but that's the day and age that we live in. It was worth it. Even though we got off to a slow, even though we got off to a slow start, you stayed on, you learned something. And most importantly, the takeaway is that there is a huge menu of products and services, some of which are offered by the standard, but some of the other great carriers that IAMS represents, and that CAT is the key for your success in that way. Kat, any questions that have come up?
So many. We had huge engagement on this webinar. So again, really, really lucky to have you on this, Paul. Wanted to just ask these questions while I have you on here. And just like you were saying, I had a comment here, not so much a question, but Pete had mentioned it's called the consumer closeness factor when technology stops. So absolutely. And so again, really thankful to have you here, and thank you everybody for sticking on. We had some nice engagement. Ellen, you had a bunch of questions, and so one of them we asked earlier on, you had also asked, do the restrictive annuities include the level pay over life expectancy? And also, do the Medicaid balloon annuities exist anymore for veteran benefit planning?
Right. So, all right. So I'll take the first question, which is, yes, they are level payments over time for life expectancy, not life only. So even if the client dies, the payments will continue for life expectancy. As I referenced in the earlier, if you're 70, 68, 70, your life expectancy will be 15 to 19 years. So when we do a restricted immediate annuity payout, we actually make the payment 19 years, 3 months, whatever it is. Typically what's used are the Social Security actuarial tables. You can go to Social Security and go, what's the life expectancy for a male age 68, for a female age 83? And they give you years and months. And so in turn, that's what we illustrate. So then that meets the life expectancy requirement for that. Now, relative to balloon payments, I don't believe they exist. I think we even illustrated in one of our slides that one of the legislative acts was to eliminate that ability to have that balloon payment on the back end. Again, we want to do things ethically and within the regulatory and legislative realm. And so, no, balloon payments, you can't go, oh, I'm only making $10 a month. And in 5 years, somebody's going to get this huge balloon payment of a million gazillion. Can't do that. The payments for both Medicaid planning in particular, and as I understand it, the aid and attendance benefit got to be level pay, life expectancy, period, certain.
Very good. And then I had a bunch of people asking if these slides will be available. I'm allowed to share these slides, right, Paul? And then, of course, put
Yes, you
this
can
on
you
our
can share them.
YouTube library. Okay, very good. And then another thing, so that was for you, Juanita, and for you, Dave, also. I did get another question from Dave asking if you would mention the QIT that his state, Iowa, requires.
The QIT. So Dave, help me with what the QIT is.
What I could do
I
too
know
is I
we
could,
used.
uh,
All right.
no, I'm sorry. Go ahead. Go ahead, Paul. Hey, Paul, I think you froze there for a second. You still with me?
Okay. Am I back?
You're back, yes. No, I'll reach out to
Okay.
Dave and get some more clarification, and I'll probably circle back with you.
Yeah.
And then I had maybe one more question. Who is the beneficiary in the case study? The beneficiary was, it was the state, right?
It was the state. Yeah. So
It was the state.
and again, that goes to, if you have some, um, aspersions there, the state will get reimbursed if the person in the nursing home predeceases the period of the annuity. It gets reimbursed to the extent of payments. Now, with Medicaid compliant annuities, there is a contingent beneficiary, son, daughter, husband, wife. There's a contingent beneficiary. State is reimbursed. Whatever remains does go to the kids. So in that circumstance, oh my goodness, mom was on Medicaid for 9 months and now we don't get anything. No, you do actually. This is one of the benefits of the planning. The state will get reimbursed for those 9 months of care, but whatever remains goes to the contingent beneficiary, usually son, daughter, husband, wife, what have you. So that's how that works.
That's awesome, Paul. And if you have one more minute, I just have
All
one
right.
more question from
All right. And
Dimitri.
going back to Dave's question. So, he used the term QIT, Qualified Income Trust, is what that is. There's
Mm,
also a term called the Miller Trust as well. And that's an element of planning. Now, that's separate and distinct from the Medicaid compliant annuity. So, when you're doing Medicaid compliant, again, with an elder care attorney, or at minimum, somebody that full-time specializes in Medicaid filing assistance. There are people that do that as well. Generally, you'll see a couple different trusts in play. One's called the Miller Trust. Iowa apparently uses the term qualified income trust, where you can put money in. There's also the use of a special needs trust. Again, legitimate planning. That special needs trust can be used for incidentals that the Medicaid or nursing home insurance won't help with, like getting your hair done, like getting
yeah,
some toiletries and things like that. So you have the special needs trust as well. So those are other ways to reposition assets and still qualify for Medicaid assistance. Whatever's left over, again, after you do all that planning, and there are limits to those types of trusts. Once those trusts are fully funded, then that's where the restricted annuity comes in on the rest of the assets.
very good. Very good. Thank you for answering that. And I've got one more question. Thank you again so much for your time, Paul. Dimitri had asked, does Standard provide a letter of intent or beneficiary guidance, such as a statutory POA integration or care funding instructions for clients who purchase this product?
So the short answer is, I just gave you a resource page that
Hmm.
tells you all the things that we can do. Now, we are a product provider. Always keep that in mind. I know more than the average person, but I'm not professing to be a Medicaid planning expert. Kind of like that, but no. So we don't do that extra stuff. Don't come to us for that. Go to Kat. Who did I say you should be consulting with?
Your elder care attorney.
Yes. So the beauty is, if you engage that person, your client engages that person, a lot of times in Medicaid planning, ladies and gentlemen, and no offense, and it's still honorable, you are an order taker. Typically, what we see when an elder care attorney is engaged, they will say, okay, I need to position $300,000 in a restricted annuity that pays out for 12 years, 6 months. And guess what you do? You run the quote. You ask Kat for the quote. And you go, here it is. And then they handle the filing and other disclosures and things like that. So we have that. Just know that we are expert at issuing these types of policies. They meet the criteria for a Medicaid compliant annuity. And it's just a matter of you networking with the right people to have this available, and then to have the confidence that if you sell regular annuities with the Standard, that those features are built in.
Absolutely. That was perfect. So I know that we might have a bunch of questions. I got a bunch of thank yous from people saying that it was just really good material. So again, thank you, Paul, for jumping on. I've just got one poll before I leave everybody. Paul, do you have any questions for us? And then I think that's you, Jeff, on there that I see is highly engaged. Thank you so much for your engagement. I think it'll be a really beneficial time for agents right now as they head into AEP, having an extra resource in their pocket. And so, one poll question, I had three, but there was just such a good amount of information on here. Would you like to be appointed with the standard? So, I've launched that screen for those that are still on. I still see about 23 people still on. So, go ahead and vote. I'll leave that up for a couple seconds. And again, thank you so much for your time, Paul. This was an extraordinary presentation. We'll have this recorded. I'll be reaching out to all of you guys as well. And if you have any questions, just feel free to reach out. 800-255-5055. And then Paul, see you next time.
Thank you, Kat. Bye.
All right. See ya. Bye, guys.